Welcome to Financial Strategies with Andrew Agemy in Connecticut and Daniel Agemy in Colorado.
Jamie, a high net worth individual, was talking to his CPA recently. He said, I want to buy this as an investment. And I want to get that as an investment. And I've got these investments. And all these new things are presenting themselves to me than ever before. The CPA turned to him and said, Jamie, you're going to find that now that you're a high net worth individual, that all these things, many different investments are going to be being presented to you, and you're going to have a hard time choosing which ones are the best ones to do, because the compounding factor that is going to be going on in your situation with your net worth is going to be exorbitant. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today we're talking about what is a high net worth individual. And AAA, I guess the loose definition would be having $1 million plus in investable assets. So if that's you, congratulations out there. I don't know when you were, in college, in high school, working hard, because I know you worked hard. If you've got that, if you thought you were going to be considered a high net worth individual, but if you are there, congratulations, and we got some good stuff for you. I guess we should define ultra high net worth individual too, which is $30 plus million. And if that is you, we got good stuff for you as well. Congratulations to you.
Right.
The first million is the hardest. And then after that million, it gets a little bit easier, but you did a great job. $30 million is no small feat. And we have some great stuff for you as well. So today is for you guys.
Yeah. And Daniel, when you're talking about that, the low end on the high net worth is $1 million of investable assets kind of thing, right? Net worth and investable. And then, like you said, 30 million for the ultra high net worth. But then it's talked about how 5 to 30 million is the mid-tier millionaires. And it's really interesting because, like you said, Daniel, once you get that first million, it takes a lot to get that first million, but then it starts compounding. And that's what the story about the CPA and Jamie was about at the very beginning, where you can go from 1 million to 2 million very quickly, and from 2 to 4 very quickly, right? Between not only the investments working for you, but then other things that you become opportunities, right? I'm thinking of one of our clients that's high net worth, and he was always wanting to get involved with real estate and flipping houses and stuff. And he finally, after a lot of years, partnered up with somebody that was a contractor and knew that whole end. So he was just the money man. He put the money in, and by now they probably sold the house, and he was in line to make some good money on that. And he's already doing well. But it's just interesting how fast that compounds and whatnot. And it's interesting how people, I remember when I was a kid, 12 years old, and thinking how I wanted to be a millionaire. Now, obviously, $1 million back then was a lot different than $1 million today, right? But to think about it, when I hit that first million was really something. And then, it just keeps moving forward from that standpoint. So, this is a thing. And it's a great day when you have to go to your CPA and say, hey, I need accredited investor letter. Right. So that you can invest. That's a great day when you have to go to your CPA, say, I need a accredited investor letter, and to get an accredited investor letter. An accredited investor is somebody who has at least $1 million. It's a certain, they're seen as people of high net worth that can invest in certain investments that people who are not of high net worth are not allowed to invest in from a governmental standpoint and that kind of thing. So that's a pretty cool thing.
So let's talk about let's go a little bit into that. So some of these things are things that compound. So if you're investing in your 401k, you're investing in things like the S&P 500. And the S&P 500 are obviously publicly traded companies.
Right.
And people, the S&P has done about 9.5% over 150 years. And that's what's available. So the government says, well, if you have more than $1 million, you must be smart enough to make more money than regular folks.
Right.
So you can go into riskier things.
Right.
And the unfortunate part is you need to make wise decisions, but they're not always riskier, but you have a lot more upside. So
Right.
how would you like to make the investment in the company before it's publicly traded? Because that's
Right.
usually where all the money is made, in the company when it's private before it goes public. And then once it's public, it's already got these crazy valuations on it. It's already inflated. That doesn't mean you can't make money on publicly traded, but there's a lot more upside. Your 10Xs, your 100Xs, your 1000X companies are before they're publicly traded typically.
Right.
So if you get that letter, go ahead.
Well, I was just really excited about that, Daniel, because that's kind of what we did for our clients on the Bitcoin stuff before it became publicly traded, right? In mutual funds the way that it is today. And our clients participated in that. And now, not all our clients, right? But and they didn't necessarily touch it. Well, right. Some people didn't want to touch it, but, I think we had certainly our high net worth people were able to take advantage of that if they wanted to, and maybe some that weren't, but that's the kind of thing. And they, went multiples on that Bitcoin stuff, on the digital currency when it became available in mutual funds. And we saw that coming and we were able to help them to do that. So that's good. But let me just let you hold that thought where you were going with that. I just want to, identify ourselves. You're listening to Financial Strategies with Andrew Daniel Agemy, because people don't know what people don't know. A lot of people don't know what is a high net worth individual. What's a HNWI, high net worth individual? Well, that's what we're talking about today. That's today's show. And we have a paper to go along with today's show that's going to be able to help you. And it's 5 retirement strategies for high net worth individuals. So that's what today's show is to those people with $1 million or more of investable assets. And we want to speak to you and give you some good stuff today. And this paper, 5 retirement strategies for high net worth individuals, is for you. Call us at 800-725-7616 for your free copy. 800-725-7616 for your free copy. Today's topic on Financial Strategies to Andrew Daniel Agemy is, what is high net worth individuals? I'm Andrew Agemy in Connecticut today, and Daniel in Denver. All right. But you never know. Where in the world is Andrew and Daniel going to be? This month, I'm going to be doing some traveling, so you want to stay tuned for where in the world is Andrew this month. So hang on to your hats. Anyway, let's get into this, Daniel. This is great. So you were on a roll, and I stopped that roll to give our station identification. So what else do you have there?
So you were talking about that letter, and that letter, that high net worth individual letter, gives you access to things other people don't have access to.
Right.
And that's, as you were saying, a wonderful thing. That takes you out of it puts you into another bracket. And that's partly why going from that 1 million to 2 million, or 2 million to 10 million is a little bit easier, because the opportunities open up. And that letter can let you get into private funds and private equity and things like that. So, for example, you were talking about the Bitcoin and how we were able to get people into those types of things, into that. Well, there's funds, for example, that invest in blockchain companies. Mm-hmm. So if you thought the internet was amazing and it changed the world, blockchain you might think is amazing. Well, how do you invest in that? There's a few publicly traded companies, but they already have these extensive valuations. Well, there's companies where you have to invest, you have to have this letter, and then you can invest in it. But you also they have minimums. So you have to have that minimum too. And it has to be, you don't want to put your whole portfolio in there to get the minimum, because it can be aggressive. But instead of saying, well, like 9% average over 150 years, their goals are more like, let's call it, a 3 or 4, multiply your money by 3 or 4 times over, 5 to 10 years. Right. And so that's where the opportunities start opening up. And these are things you can buy either just with cash, or you can buy it in a Roth and make it tax free. You were talking about the guy, our client, who was flipping houses. He could do that with just his regular after-tax account, or he could do that in his Roth. and he can flip those in the Roth and not worry about the taxes. And some of this diversification and some of this, it gets you and I excited sometimes when we're talking about these types of things, because there's so many things that you can do. And we love diversification, and it really allows you to start diversifying.
Yeah.
So I'll pass the baton back over to you, Triple A.
Well, one of the things that's so interesting, Daniel, is high net worth individuals, right? Or we'll call them millionaires, whatever you want to do. And how, there's many times it's not uncommon for them to go bankrupt. And then they come back again. And they'll do that maybe several times. And, there's, President Trump, has gone bankrupt. People say, use that against them. But that's just a common thing amongst people with money, that they at times go bankrupt, but they know how to make it back again. So they come back again from that standpoint and keep it going. So it's just interesting. It's a different type of individual, people of high net worth. And, my understanding is that in 2023, there was almost 8 million people who were considered high net worth or above in the United States of America, North America. And so a record number of people becoming more, it's kind of like centenarians, right? People living to be 100 years old and older. There's it's just compounding. There's more and more than ever before. And same thing with millionaires and high net worth people from that standpoint. Well, I see it's time for us to be able to take a break. We got a lot more stuff coming up for you on how high net worth people can be treated and should do things that they should do. And before we take a break, I'd like to be able to give you a book that will be able to help you understand certain things written by a high net worth individual himself. Retirement Income Story by our friend David Scranton. And David has built several companies, and this book is talking about one of the companies that he built, Retirement Income Store, which is now Retirement Income Source. And we are one of the franchise holders of that. But this book here will be able to help you understand some of the philosophies, some of the strategies to be able to prepare yourself for retirement. Or if you're in retirement, be able to help you extend your retirement and not have to worry about running out of money or some of those other things that happen with people once they hit Retirement Income Story book to the next 5 first-time callers at 800-725-7616 for free, no obligation, 800-725-7616 for your free copy of the Income Story book. Call now.
The biggest mistake retirees make is not switching from the growth model to the income model. Good retirement plan is having enough income to last the rest of your life. Any problem in retirement, it can be solved with income. The biggest concern that retirees have is running out of money. The second biggest concern is that they want to grow their money so that they don't run out of money. And they think it's synonymous when it's not necessarily the case. People don't know what they don't know. And they're not going to know unless somebody tells them. People think that the only thing that they can do to grow their money is by investing for growth in the stock market. And it's very much a herd mentality. But you can only get growth when the market goes up. When they invest for income, they're able to get money no matter what happens. I'm Andrew Agemy, founder and CEO of Agemy Financial Strategies. We've been helping people enjoy stress-free retirement for over 30 years.
This is Financial Strategies with Andrew and Daniel Agemy.
Triple A, John is a guy who's worked real hard, and he built a business. And he just had a liquidity event. He just sold the business for $15 million. John hasn't spent a lot of time looking at investments. He knows his business. He did very well with his business.
Right.
And most of his money is tied up in his business. So now he has $15 million, and he knows he doesn't want to lose it. He knows that he worked really hard for this money and that he wants it to pass on for a few generations. He knows there's plenty of money to take care of him and his wife, but he wants it to pass on for a few generations. What does John do with the money? How does John protect the money but still grow the money? I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Today's topic is, what is a high net worth individual? And we're talking about this and looking into this whole thing. So Daniel, what does John do with this? I mean, there's a lot of different angles with that, right? Because some people say, well, I have more than enough money and I want to be careful because I don't want to pass it on to my kids because this is more money and it could ruin them, right? And we've seen examples of that, of trust fund babies and so forth that don't know what to do. They have too much money and too much time on their hands. And, as they say, idle hands are devil's workshop, right? And that lends itself to that. But there are things both on the investment side as well as how to handle that can be done and should be looked at, right?
Yeah, exactly. And so maybe what we'll do is we'll talk about John's situation and we'll go through the different ways of protecting this. And it may be different than what people are thinking. But when we look at old money, when we look at families that have had money for 500, 200 years, and we look at what they've done, there's repeatable patterns. It's not the S&P 500 because that hasn't even been around that long, but there are investments that we can see how they work.
Right.
And there's plans that you can put together to protect you. So when someone comes into this money, once someone's built up their wealth, what they change from is a mindset of, I just need to grow, to I want to protect my principal. I want to get the income I need to support the lifestyle that I have. And then I want to compound the rest. I want to compound it so that my kids can have some money.
Yeah.
Sometimes they set up a family office to manage their affairs. Sometimes they get together with a group of people, or sometimes they hire a fiduciary, someone that specializes in building all the aspects, the tax strategy, the estate strategy, the investment strategy, so that they can feel comfortable going through this position. But I've never talked to or never heard of somebody, I guess I shouldn't say that, I have heard of it. I've never talked with somebody who says, I just want to gamble this. AAA, you and I have talked with a lot of different investors and there's different mindsets. And some people who say may win the lottery, or they may have come into this big inheritance. They're either terrified by the money, right? And they don't want to touch it because it's not their money or they didn't work for it, and they're terrified and it sits there and it rots, and bankers get rich off of them, insurance companies get rich off of them.
See it all the time.
It grows wings and it flies away.
Yeah.
There's another group who doesn't care about it and they just blow it. And this is a mental aspect where they don't internally feel they deserve the money. And that's a problem. So we're not talking to those types of people because they're going to find a way to lose the money. There's been studies where a trader will earn $10 million, their investment person, but it doesn't fit their belief systems. When they go drink beers with their boys, they complain about how the world's out to get them, and they complain about how expensive, and now they have $10 million. It doesn't fit in with, and their subconscious finds a way to lose that money. There's two choices. One is they could change the way they think and go find a new group of friends that will encourage them, build them up, help them change their mindset, right? But they don't. They like the position they're in. And this is a real thing. So this is a whole nother aspect that we're not going to get in today, but you have to have the right mindset. So if you earn this money, you probably already have the right mindset, and you can take some of these principles we're about to get into.
Yeah. Yeah. But, I agree with you, Daniel, on that front is that, the 6 inches between years sometimes can be multiple millions of miles with their thought process. And I think we should probably do a show on that at some point just to be able to help people because, so many times there are people that have become high net worth individuals, but they still think on a low net worth individual mind thought process, and it's not healthy. So I agree. So you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is what is high net worth individuals? And we have a paper that we'd love to be able to give you called 5 Retirement Strategies for High Net Worth Individuals. And you can have that for free by calling us at 800-725-7616 for your free copy. No obligation. 800-725-7616 for your free copy. 5 Retirement Strategies for High Net Worth Individuals. You listen to Financial Strategies, then you're Daniel Agemy, because people don't know what people don't know. So keep listening to find out what you don't know yet. Daniel, this is go ahead.
Let's go through, let's mention the 5 and then go through them. What do you say about that?
Okay, great. So the first one is diversification and long-term investing, tax management, number 2, insurance and risk management is number 3. Number 4 is estate planning. And number 5 is working with a fiduciary advisor, a true fiduciary advisor.
Or I like to say on that one, you build the right team.
Yeah, there we go.
You, right, AAA.
The right people. You got to have the right people feeding you the right information. As a CEO, the CEO of a company needs the right team around him, the CFO, the CIO, the CCO, all these different people to be able to give them the information he needs to be able to make a smart decision quickly, easily, to be able to move the company forward. So that's the same thing with this. It was these high net worth individuals. They need the right people around them. You're great.
Especially when we're talking in that range from that 5 million to that 30 million that you were mentioning earlier, AAA. Things change. The diversification changes. It's much different than what you're talking $1 million and below. The way you're diversified differs. Right. The tax is different. And the mindset is a different where you understand the value of the capital.
Right.
And what I mean by that is you're not thinking about you, you're thinking about generation after generation preserving this wealth. So it's not a mindset of, well, I have too much money, I don't know what to do with it, or that's too much income. It's preserving and compounding slowly for 60 years, 100 years, 200 years. And that's what these strategies we're going to go through are helping people build plans to be able to do.
Great. Good stuff. So, starting with the diversification and long-term investing, as you mentioned, they invest differently than when you had, when you were low net worth, right? Low net worth people typically invest in the S&P 500 because that's all they know, or those mutual funds or those kinds of investments, right? But once you become high net worth, there's a whole different way of doing things and a whole different diversification. They understand the diversification. Prior, low net worth individuals think diversification is investing in international mutual funds, bond mutual funds, value-oriented mutual funds, commodity mutual funds, some kind of mutual funds, because that's how they're going to get their diversification, which is not true. But high net worth individuals understand true diversification, right?
Right. So when we talk about diversification, there's some major asset classes. So one would be private businesses, right? So a lot of high net worth individuals own a business and it's a private business and they may still own it, or they may have had that liquidity event, they sold it and now they got a pile of cash, right? Mm-hmm. So this is one that we see all the time with high net individuals is they own a business and that could be their primary resource, right? The business that they own.
They're very good at making money in their business, but you got to diversify.
Right. So now we're going back to the story about John. He's got the $15 million. He doesn't have the business anymore. So when we look at the diversification, one thing is, how is John going to support himself? Where's he going to get the income to have the lifestyle that he wants to have? And we focus on that typically. We look at that first and we get him the income that he needs so that the rest of the assets can be protection and they can pass on from generation to generation or go to the cause or whatever it is. Each individual is different, right, AAA?
Right. That's, everybody, and that's the key with high net worth individuals. They're looking for customization, something that fits them. The boutique approach, as opposed to the fast food approach that typically high net worth people are involved with. And unfortunately, there's a lot of people who are over that $1 million of investable assets that are still doing it the old fashioned way with the non-boutique approach, right? That they're doing the financial industry's fast food by using one of those big name companies to deal with them that do things in all mutual funds, as opposed to true diversification from that standpoint. And that's real key, I think, from that standpoint. But, then also the tax management standpoint is, people of high net worth understand how important it is to have the right tax people on their team, the right tax management, to be able to do tax planning, to be able to save as much as they can from taxes. It's not about what you make that counts, about what you get to keep. You're listening to Financial Strategies by Andrew and Daniel Agemy. Today's topic is, what is a high net worth individual? And we have, we're going to have to take a break here. Before we go to break, we want to give you the book, Retirement Income Storybook, written by David Scranton himself, a high net worth individual. And it's written to be able to help people of all standards be able to have the money that they need in retirement and beyond. And we love to put this book in your hands. It's an easy read book. You can have it for free by calling us at 800-725-7616, 800-725-7616 for your free copy to the next 5 first-time callers. 800-725-7616 for your free, no-obligation book of the Retirement Income Storybook. Call now.
Financial Strategy with Andrew and Daniel Agemy.
I was talking to a guy the other day, and he was talking about how one of his friends bought a boat, and it was built in South Africa, and he was going to go help his friend sail the boat from South Africa to Florida. And this is an extensive trip. And so we start talking, and we're talking about buying investment properties, international investment properties, as a form of diversification. And he owns a few properties in Belize, and he had just bought a 100-acre plot of land in Belize to build some Airbnbs on. I'm Daniel Agemy.
And I'm Andrew Agemy. You're listening to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Andrew in Connecticut, Daniel in Colorado. And today's topic is, what is a high net worth individual? So Daniel, that's a very interesting scenario there. And that guy is obviously, if he's buying that, high net worth individual. So what's the rest of the story?
Well, first off, you need expertise to do that. Second off, it doesn't cost as much money as people think. So you can get diversification. You kind of need to be in that, range you said, that 5 million to, you could do it with $1 million, but that 5 to 30 million. But when we look back for families that have kept wealth for hundreds of years, right? There's typically 5 staples. You've got gold, stocks, cash, bonds, and real estate. Okay. And there's other things, right? There's alternatives, because some people like to throw commodities in there. Some people have businesses. There's art, right? Private equity. Now there's a new asset class, cryptocurrencies. And so you can fit those in and tailor them. But land has always been one of those things. Now, that's what he was doing. He understands land. He understands how you cannot print more land. You can't print more gold. You can't print more Bitcoin. You can't print more land. And you need these monetary hedges. So if you're buying beautiful land on the water, that's a good investment. If you're buying one condo in a condo association, that may not save your money for 100 years. I don't know. I don't know the answer to that, right? But that's what we're looking at, is when we're looking at diversification in land and properties, is beautiful properties that they can't make any more of on a lake. If you're worried about climate change, you probably definitely want a lake and not on the beach, right? Because you don't want your property to go underwater. If you don't care about that, well, maybe stuff will start going underwater. You get some deals. But those kind of 5 asset classes, I like to throw in the digital assets or the private equity type investments, investing in other businesses especially.
Right. Okay, cool. That sounds great. That diversification is so important. Just like the Ecclesiastes 11:1-2 says, cast bread upon the water, after many days will come back to you, given unto 7 portions, even 8, for you don't know what disaster will come upon the land. There you're naming like 5 right off the top of your head from that standpoint. And we like diversification. We like not paying taxes, more taxes than what we have to from that standpoint, right? Which is a beautiful segue, into the tax management end of things.
Yeah.
When for high net worth individuals, and because it's not about what you keep, what you make that counts. It's about what you get to keep. And there's a lot of different things that come into play with this. I mean, one of the big questions what we have with people who have run up capital gains and they want to change some of their investment strategy is they feel tied to their investments, because how do I unwrap these capital gains that I have? And there are ways to do that. Did you want to speak to that, or do you want me to speak to that?
You can go forward.
Okay, so the unwrapping those capital gains, there's various ways that we can do that. And some of the things that we do is take some of the capital gains in 1 year and then take the rest, like we'll take some capital gains in November and then take the rest of the capital gains in January to be able to make sure that the tax brackets are properly. There's, offsetting capital gains by contributing. If you listen to some of the other shows that we did about solo 401ks and that kind of thing, that we can take capital gains in one fashion, but then, put it into, a solo 401k that allows up to $69,000 if you're old enough, if you're over 50 years old, to be able to handle from that angle. So there's various tax advantage ways of investing money, tax loss harvesting and charitable giving. And there's a lot of different ways.
That's one of the reasons you and I like real estate is the depreciation aspect. We are able to save a lot of money on taxes by using that depreciation from money we're making from other businesses, and we can use the depreciation. So it's not just the real estate is not just a diversifier of investable assets. It can be it can give you that tax benefit as well.
And Daniel, another thing, when you're talking about that, there's cost segregation, which on that real estate, you can depreciate certain things. If you have to go through a process, but you can depreciate certain things faster, so you get more money, it's more tax advantage ways up front. And then, we've seen people that are able to have this loss from depreciation on their taxes from the real estate that then allows them to convert, IRA money to Roth IRA money tax-free, which is amazing kind of thing. Doesn't work for everybody, but there's these ways that do it. And for those high net worth individuals that it's worth paying the fees to do this or whatever the case may be, because they're going to save big dollars in taxes from that. Whereas the, for lack of better terminology, the low net worth individual, it doesn't make sense to do all those things, right? But you're listening to Financial Strategies with Andrew Daniel Agemy. Today's topic is, what is a high net worth individual? And we're talking about those things that can help you, if you're fit in that category, get advantage. We don't have time to go into all the different nitty-gritty things today, but we're trying to hit the high points. We have a paper to go along with today's show. How much do I need to retire? Because when it comes down to it, whether you're high net worth or not high net worth, this 2-page brochure will help you understand some things, and that it's not as much about the assets as about it is the income that you're getting from those assets. So we'd love to put this paper in your hand for free by calling 800-725-7616 for your free copy. How much do I need to retire on? Call for your free copy now. You listen to Financial Strategies, Daniel Agemy, because people don't know what people don't know. Daniel, we're moving along here talking about tax management and the various ways of doing that. Still a lot more to go.
Yeah. So when John sold his business, he got $15 million. He could have done tax planning ahead of time if he had talked to us earlier, right?
Right.
Because you can, as a business owner, there's some really cool tax codes where you could put close to just above $300,000 away a year into, so you get the tax benefit now, and then you have the flexibility to take the pay the taxes on it as you want, instead of getting a lump sum of $15 million and having to deal with the taxes all at once. Some of the things that can help you with the dealing with those taxes right now are what we talked about, the depreciation, the cost segregation, the accelerated depreciation. There's for charitable donation trusts, which can help you with that. And then there's the tax advantages accounts, which we talked a little bit about. Did we miss anything without going into too much detail on the taxes?
Well, yeah. Well, the taxes. There's the diversification there in taxes, right? Between the tax free, the tax after tax, the pre-tax money, and there's different ways of combining those to facilitate a plan that can help you. And like you said, Daniel, if it's before the business is sold, some things can be done to help significantly for that one after the business sold to pay less taxes. So that's kind of the key. But it's not all is not lost if you've already sold the business, because now the thing is going into the future is, okay, the taxation on the money that is left over. So
yeah,
that's a good point.
And I guess one other tax strategy, which also goes into our next talking point, which is protecting yourself with insurance, protecting yourself in a lot of different ways from insurance. But one that hovers between these two would be universal life is what a lot of people use. Universal life insurance is what a lot of people use to pay the taxes on the estate when they die. We like using whole life insurance to help with this, because what it allows you to do is it allows the death benefit to grow, and it allows you to have another aspect of diversification where you can tap into that money, you can use that money, you can take advantage of things. And it fits in the cash bucket in my mind when we're talking about those 5 different things, but it's not stagnant. And that's an amazing thing. So it helps you with the taxes when you do pass away, but it also helps you while you're alive to be able to give you cash, a huge amount of cash on a tax-free basis, to be able to participate in different types of things as they present themselves.
Yeah. The insurance facet for the high net worth person is very important, right? Whether it's for the estate planning, it's for life insurance, whatever. The insurance is a lot of different things, right? There's house insurance, there's car insurance, there's umbrella insurance. There's all kinds of insurances, and you need to make sure, the high net worth person needs to make sure that they're managing the risk appropriately. Long-term care insurance, right? There's different people that high net worth people might not need long-term care insurance because they have the money to pay for their long-term care from that standpoint, and they don't need it. But that's the question is, you have to look at all those different assets
to your plan, right?
Right. If we look at a pyramid as a financial plan, the foundation for all people of all net worth is insurance. Because think about it this way: if you hit a child, if you don't have car insurance and you hit a child chasing the ball, forget about trying to save anything or trying to protect anything or whatnot. So insurance is the foundation, but you need some. You can't win a game only by defense. You have to have some kind of offense. You have to rack up the points. Otherwise, as a game that's 0-0, there's nothing there. You need to be able to have some offense to that. But insurance is an important factor to manage the risk appropriately. Not just, so managing risk of investments, managing risk of life is a very important thing. Right.
These next two, this one and the next one, I think may be the most important thing for many high net worth individuals, because a lot of people aren't talking about it. So the insurance, I talk to a lot of high net worth people, and they don't know what their protection is on their cars, on their house, and they don't have an umbrella policy. So we don't have time to get into all of these, but if you don't know what the coverage is on these things, you don't want to get a lawsuit. Right? You don't want to have a lawsuit and lose the $15 million you just sold your business for. So make sure you have the proper coverage, get help understanding what that is, and make sure that umbrella policy is in place.
Yeah. And just going along with that, again, for people across the board, what they're doing today when you get sued, if you don't have money, they're going to look at your future earnings and attach future earnings. So you want to make sure that your insurance, you have the proper insurance coverage so that even though you might not have money today and you're building a business that is going to be worth multi-millions in the future, well, guess what? They can attach that before you even make the money, which is egregious. You listen to Financial Strategies with Andrew and Daniel Agemy. Today's topic is, what is a high net worth individual? And we trust that this is helping you, whether you are high net worth or you're not high net worth, because there's a lot of principles that apply for both. But we have for you today, before we go to our next break, is the Retirement Income Storybook by David Scranton, with all kinds of alphabet soup after his name. And we love to put this in your possession so that you can be able to understand some principles of retirement planning that you may not know, probably don't know. And David goes into a lot of different things that we be able to help you be able to be prepared to have more than enough income to live the rest of your life. You can have that book for free by calling us at 800-725-7616, 800-725-7616, the Retirement Income Storybook to the next 5 first-time callers. Call now.
Do you have any questions for me about retirement income source?
I just want to make sure I can invest well enough to have enough income, enjoy my retirement.
We build a custom retirement plan based around your income and goals.
How do I know I can trust you?
Building trust does take time, but our investment advisory arm is comprised of fiduciaries, which means our obligation is to you, so you can enjoy your retirement with a little more income stability.
I'm in.
That's 2 out of 3.
This is Financial Strategies with Andrew and Daniel Agemy.
Michael Jackson, Elvis Presley, Howard Hughes, Prince, Casey Kasem, Aretha Franklin. All these people are high net worth individuals that did something or didn't do something in their estate planning that affected the money that they had made during their life. I'm Andrew Agemy.
And I'm Daniel Agemy, and you're listening to Financial Strategies. Today, we are talking about what is a high net worth individual. And we are trying to lay out some principles that have worked for hundreds of years. We're trying to give some actionable items that the listener can use to help protect the wealth that they have built up. And AAA, what can we learn from those ultra high net worth people, celebrities that you just mentioned?
Well, we can go into each one of those to see what it was. And some of them died without a will at all. Some of them did some planning, but not enough. And today, with the limits that are on estate taxes and so forth, a lot of people say, oh, I don't need to do that, or I'm covered to a certain amount. But, there's a lot more to be handled and a lot more to be thought of than what meets the eye. I mean, from a biblical standpoint, it says that the righteous gives to his children's children. And it's a gravity of man that a man dies and leaves nothing for his son. And, the wealth of the righteous is stored up, or the unrighteous is stored up for the righteous. And the point is that people need to be able to take care of their estate planning properly. Now, what does properly mean? Well, it's different things involved with that. There's federal law, as well as, what their perspective is and what God says and how to do things that people care from that standpoint. But so many times people can be poor stewards during their lifetime and getting 3 or 4% instead of and having the banks make the rest of the money, or they can be poor stewards in their death as well and making sure that the money is not passed on in the way that they want it. And there's lots of ways to pass it on. There's trusts. There's trusts that can control the money from the grave for people to be able to be handled in the fashion that they want it to be handled in. There's owning businesses, through trusts and living trusts and so forth, so that the business can continue on upon death, as opposed to it just being shut down. There's lots of different facets and things that need to be taken care of. And it's important to be able to have the right people on the team to be able to help people to be able to, people of high net worth to be able to achieve those goals. If people don't take care, the amount of time, money, and effort involved with people taking care of their estate planning and their future plans now is nothing compared to the time, money, and assets that will be spent on it in another point in time.
Yeah, right now our world is so crazy that this is so important. So I think almost everyone needs a trust, a living trust, because it can do so many different things, and it can get the monies to where you want them to go, but it will also make it for whoever has to clean up the mess after you're gone, right?
Right.
It will make it so much simpler for them. So a trust is not always what people think that it is.
Right.
Another thing that trust can do for high net worth people is it can give them anonymity, right?
Yes.
It can
Right.
help them. It can help. So you don't see that, Joe Smith owns these 17 businesses. It just
Right.
shows some name of some trust that nobody knows. So that won't give you protection from being sued, or won't give you protection. But what it can do is, as you mentioned earlier, AAA, if you own 3 businesses and you pass away, if you're a large owner of those businesses, or even if you're not, they have to figure out what happens to the business. Do the bank accounts shut down? Who makes the decisions? At least if your ownership, instead of you personally owning the business, the trust owns it, then what happens is the trustees can sell that business to the other owners, can sell it to somebody else. It can be managed for you in the way that the trust says it should be done.
Right.
That's one huge reason for having a trust. There's other reasons. The other is, I was talking to a guy the other day, AAA, who owns a bunch of real estate, and he has LLCs for his bank accounts for the real estate, but the real estate wasn't titled to the trust. And so the LLC, or I'm sorry, it wasn't titled to the LLC that he has, right?
Okay.
So the LLCs are to give you actual protection, right?
Yeah.
So in a dream scenario, you would have your LLC own the real estate, and then your trust own the LLC. And that way the real estate could keep being managed or sold properly by the trustees if something happened to you.
Right. And one of the things that happens too is that well, I'll get into that in a minute, but you're listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic is, what is a high net worth individual? And we're talking to people who have $1 million of investable assets plus. Actually, the 5 million and above is who we're talking to today, to be able to help you be able to plan, prepare, and understand some things that you may not understand currently. I know typically people of high net worth are on top of things to a certain degree, or one way or another, but we trust that this is adding value to you. Today's paper that we have for you is, how much do I need to retire on? And it's talking about how to be able to have more than enough money to live, to have in and through retirement, to be able to do what you need to do. And our concern is to be able to have you pass it on to you. So you can have that for free by calling 800-725-7616 for your free copy. 800-725-7616 for your free copy. You listen to Financial Strategies with Andrew and Daniel Agemy, because people don't know what people don't know. Daniel, when we're talking about those things, and not having the real estate in the LLC properly, and the business in the proper trust, or whatever the case may be, that's where the proper team comes into play, right? Because the proper team is going to make sure that because you may not know. How many times have we seen people that have trust or whatnot, and the assets are not in the trust because they don't know that they go in there? And sometimes even their attorney has told them, make sure you put this in its trust, but they don't do anything about it. So it's having the proper team to make sure that not only you know what you need to do to be able to have the assets in the proper entity, but also to be able to actually get it done. And so that could be 2 separate things. And that's where, another point that comes into play with people of high net worth is making sure that they're working with a true fiduciary advisor, right? Having the proper team, people that are looking out for your best interest, and doing what's in your best interest. I mean, recently I had hired an attorney, and it wasn't until I paid him $10,000 that I realized that he wasn't doing what was in my best interest, and wasn't the right specialty, that kind of thing. So it's very important. A true fiduciary is going to go by the fiduciary standard, which means that they're putting you first and thinking about your best interest first, not stockholders, first, like if, a CEO of a corporation, its first interest is to make sure that the stockholders are taken care of. Secondarily, the account holders or the client or the customer, whoever it may be, they're willing to be able to put that in writing so that you can actually hold their feet to the fire from that standpoint. So a lot of people will say they're fiduciaries, but the question is, are they a true fiduciary, or are they just going by the suitability standard, doing what's suitable for you instead of what's in your best interest?
And for these high net worth individuals, you need a team. Maybe you hire somebody to manage your money. You just hire an asset manager. You're taking care of the rest. But if you don't have the rest, what you need to do is you need to find a team. That includes your tax strategy, your estate strategy, your diversification strategy. Do they understand alternatives? Do they understand gold? Do they understand monetary hedges, right? You need that family office type experience. Now, you might not have enough. If you're 5 to 30 million, you may not have enough to start your own family office. You might not even know what a family office is, but you want the service that you would get, the strategies that you would get from a family office who understands generational wealth and protecting you, especially from these monetary debasement, because that's one of the biggest risks that we have right now with a world full of debt, right? With a world full of printing money. And so when you're looking at that team, those are some of the things that you need to be asking the questions for when you're interviewing to help people, when you're interviewing to hire the team to help you with these decisions.
Right. You're exactly right, Daniel. And, we want to make sure that you're getting some good clarity and information in regard to this, because how many advisors, whether it be tax advisor, whether it be estate planning advisor, whether financial advisor, whatever it is, do you need to be able to ruin somebody's program? One. That's all it takes is one. So if you have a team of people and you got one bad apple, doesn't work. So make sure you get in the right counsel to be able to make good, smart decisions, that they're talking together, that they're being congruent, that they're not giving you independent information, but it's all working together. So Daniel, that's good advice. I appreciate you doing that. As we finish up here, it's very important for us to be able to make sure that you are clear and have what you need to be able to make good decisions. We have a book that we'd like to give you as we close up today's show called The Retirement Income Story. You've been listening to Financial Strategies with Andrew and Daniel Agemy. Today's topic has been, what is a high net worth individual? And here's a book that can be able to help you be able to understand the things written by a high net worth individual, David Scranton. We'd love to put this in your hand for free to the next 5 first-time callers at 800-725-7616. 800-725-7616 for your free copy, to be able to give you some advice, some tips, some information that you may not have otherwise. So call now, 800-725-7616 for your free copy for the first 5 first-time callers. Until next time, we look forward to you having a stress-free retirement.